Welcome to the Rick Helps Real Estate Show. I'm going to disappoint people on both sides of the equation this morning or this evening. All depends on what time you're watching this. For those of you that think the market's going to crash this summer, I don't see it. Those of you that say it's going to be a great time for buyers, I don't see it. Is it going to be a great time for sellers? Nope. We're stuck. So I'm going to share some numbers with you because it's interesting, and there's just some things that have to happen for any of those scenarios to come true, especially on the crash side. I mean, let's face it, we're going to have a huge spike in supply and sales to stay where they're at right now, which we're literally in the basement. I'm not seeing that. Many people were saying that supply is going to keep growing through the summer. And I've been on the other side of the aisle saying, no, I don't think so. And I'm going to show you why and show you where we're at today. How far off am I? Let's go right to supply right now and look at active listings. And you can see here that this line has kind of flatlined. Now it's going to go down a little bit more. I'm going to make this chart just a little bit bigger here for you. And the reason I can predict it's going to go down a little bit more is because after the Memorial Day weekend, sales dropped off and we didn't get more new listings. And that just happens every Memorial Day. If you're a realtor out there and you had an open house on Memorial Day, let me know in the comments what your traffic was like. Because I've been saying it's slow and Memorial Day is always a terrible day to have an open house, but you may have been in a neighborhood where you knocked it out of the park. So I'm curious. Let me know in the comments section if you had a successful open house. So we're seeing these active listings decline a little bit and then kind of flatline, and they will be a little bit lower here going into next week because I'm tracking it every day so I can see it. And then it might come back up, but then, well, maybe not because next week's numbers are going to have a spike in expireds simply because there's always more expireds at the first of the month. So that's going to drag the existing inventory down yet again. And we're not seeing enough new listings to come on to make up for the number of homes where people gave up. Tried to sell my house. I give up. It's at the end of the contract. I'm just going to let it expire. And they will be pulled off the market and it's going to lower the numbers. So if you're hoping that you're going to see a spike in inventory and here comes the crash, sorry, folks. And now let's talk interest rates for just a moment. They're stuck. You know, mentally, when we see interest rates start to climb over 7%, people start saying, okay, it's just a matter of time. Treasury market's having a big revolt. The bond traders are revolting. Vigilante bond traders, we're going to have mortgage rates over 8%. And then it turns around, goes down to 6.9. That's where we're at today, 6.97. And we're sitting here at 6.97. And the trend for the day is negative. Rates are going to go slightly higher. But we're stuck there. And it looks like we're going to be stuck there for probably most of the summer. Oh, but wait, Rick, the Fed is meeting in June. They're probably going to lower rates. Well, they might. It all depends. They're looking at lots of data, going to make a decision. They're looking at tariffs, the impact, unemployment, inflation. Inflation numbers come out on Friday. But I don't see a lot of movement. You know, we've seen in the past here where they come in and they cut us like 0.25 or 0.50. Mortgage rates didn't budge. It's all based on the 10-year notes there. So we're stuck there. And I think we're going to be stuck there in July. Now I'm seeing on social media, which I'm in a few social media pages for real estate, and I'm already seeing some agents, not many, saying, boy, it's going to pop in July. Here we go. Things are going great. There's too many people waiting on the sidelines. Interest rates are going to be lower because of a cut in June. Knock it off. It's not happening, folks. I don't go to a lot of meetings. I don't go to a lot of rah sessions with inside the industry. I just kind of like to look at the numbers myself and make up my own mind and share it with you guys. I'm not in the camp that it's going to be a brisk selling season this summer. I think if you're trying to sell, you're going to have a tough time. I'm not seeing desperation though. I'm not seeing people saying, oh man, I got to sell. Let me just mark this home down like crazy. They're just saying, well, I tried. I couldn't get the price. I'd give up. And we're seeing listings under contract. They're not falling off the face of the earth. I'm only comparing 2 years here, this year in the red line, this year in the last year in the purple line. So we had 8,250 on week 21 last year. And this year, 8,056. That's less than 200 homes. So it's about the same. And then guess what happened? It goes down during the summer. Pretty easy to make a prediction that that's where we're going to be. Now, Let's talk a little bit about the Cromford Market Index. Look, it's a proprietary measurement by the people of the Cromford Report where they measure between supply and demand and they layer it in an index. And it's going down every week, which is a precursor that says that you can see some price declines or you can see the market start to follow suit. Now, what happened here in 2023? Well, it started going up because it took a rough beating in 2022 when interest rates spiked up. Interest rates gave us a little bit of relief. So the Cromford Market Index started to climb a little bit because the difference between supply and demand, which is what I measure here, you can see here the yellow lines are new listings and the black line is new contracts. And it went down again. It's a holiday week, but they're very close together. When they have a huge gap, like you see here just a few months ago, and way back here, that's when you see price declines. And that's what we saw in 2022. So, what does it mean when you look at the Cromford Market Index and you're trying to predict prices? Well, let me show you this chart. This is the Cromford Market Index as a predictor of future price appreciation. Now, I know this is hard to read. I'm going to pull out my handy dandy magnifying glass. Follow along with me here. And if you're just listening, I'll try to tell you what I'm looking at. So, see where the line here went up, the black line, and that is the Cromford Market Index. Now, that's back in what I just showed you, where the Cromford Market Index was starting to increase. What happened to prices? Well, that line increased before prices started going back up. You can see that it went up, and I'll move the magnifying glass here, and I want to get rid of this. Let me get rid of this thing that's in the way there, there we go. You can see that the blue line is growth, prices. So you already had an indicator here where the Cromford Market Index was starting to come up. The price increases followed. What's the leading indicator that price is going to go down? We'll take a look at the far right there. See how it's turned? And it really took a sharp slide down right there. And then we saw that prices were still going up while the indicator was on its way down, but it was telling you that things were going to go south. And sure enough, you can see down here on the bottom where the blue line, that is negative growth. That happened in 2023. Should have seen that coming in 2022 as the line was going down. So where are we today? Today we're going down, but we're going down and we're kind of starting to level off because we're really at one of the lowest bases for the Cromford Market Index that we've been in a long time. And you can just see right here how low it's been before. And this is back in the great financial crisis where things fell off the earth. We don't seem to be headed that way. We're kind of flattening out. So it's telling us the prices are going to continue to soften, especially through the summer. There's nothing there that's saying on the index that it's going to be rough, that it's going to be desperation time. It's saying we're stuck. And we're not used to that. We're not used to being in kind of a malaise. We're used to things going up or going down and happening in a quarter. And right now we're in this situation where everybody's on the sidelines waiting. Central bank is waiting and sellers aren't sure what to do. And so everybody's just like, well, let me just see. And we're in one of those waiting periods. Now, there's a survey that came out by BMO, and there's a couple recaps here. Some of the results of the recent survey by BMO startled me. These are the Cromford folks. They questioned potential home buyers and found that high mortgage rates are impacting home purchase plans for nearly 7 in 10 adults. That's a well-duh moment. Okay, we know that. High interest rates combined with unaffordability, home prices are high. Here's the shocker. More than a third of potential buyers surveyed said rates would need to drop to around 3% or less before they'd be ready to step off the sidelines. Seriously, folks, you're not going to see 3%. We got down to 3% because the nation's economy was shut down, closed because of the pandemic. Everything was closed except for grocery stores and hardware stores, hospitals and doctors' offices. So the interest rate, the overnight rate by the central bank went down to zero. Goes down to zero. You add about 2.5 points to that, you end up with a 2.75 mortgage rate. That's not going to happen again unless our economy just ends up in the absolute toilet. Is that what you're hoping for? Are you hoping that things get so bad in our economy that you can get a good rate? Let's hope not. I mean, sellers get accused of greed all the time. Hey, buyers, if that's what you're hoping for, I want to consider that greed statement for a second. The idea of buying a starter home and upgrading later is losing its appeal, with 58% of respondents viewing this strategy as outdated. In other words, new home buyers, first time home buyers are saying, I want to buy a house I'm just going to stay in. I don't want to buy a smaller one and then move to a bigger one and then move to another bigger one. They just want to avoid that process altogether. They also don't want to buy a house and fix it up. So the first time home buyers that are waiting are saying, when I see a house I like, I want to stay there. And I've experienced that. I'm staying here for years. I'm not going to stair step up. That strategy can sometimes work out very well, and sometimes it can kind of bite you. So that's where the buyers are right now. They're just saying, unless I see the perfect house, unless I get a smoking deal on an interest street, staying home, I'm going to rent. And here's where we're seeing now on average asking price, list price per square foot. You can see that it flattened out. It went down. Now it's flattened out. It went up just a little bit. Nothing to shake a stick at. Months supply is still not too bad. 3.4 months of supply. Number of price changes, price cuts per week has gone up just a little bit from last week. I expect that to spike up again the 1st of June. You're going to see a lot more expireds showing up. And found an interesting article here saying that Scottsdale's millionaire population soars, outpacing global wealth hubs. They're saying here, Scottsdale is adding millionaires at a higher rate than just about any other city in the world. Isn't that interesting? We've got a lot of millionaires up there in Scottsdale, and that's a market that's not doing too bad. Although the high end of the market is starting to see some softening, and it's going to be softer because it's summertime, and we just see that more and more. Now, have you signed up for my newsletter yet? If you haven't, here's what it looks like. Get it every Monday morning at 7 o'clock. I give you that chart for comfort. It's mobile friendly. You can take a look at your city, see how it's going, read what they say about it. You can upgrade to my premium newsletter. It's got all kinds of goodies in it. It's really expensive. It's $3.99 a month. 14-day free trial. Give it a shot. Let me know what you think. And we got some mortgage rates here. You can contact our team, search for homes, and then my opinion down on the bottom. Comes out every Monday morning at 7 a.m., just like clockwork, and I don't spam you. So let me know if you would like me to provide any more information in that newsletter when you do receive it. Now, as we go through this week, we're going to look at some economic data. Don't expect a lot of changes, folks. I think we're just going to be sitting here going, okay, well, mortgage rates didn't move on that. Prices kind of steady. People contributing an average between $9,000 and $10,000 towards concessions when they sell their home. Ho hum. Let's wait and see what happens next week. And that's where we're at. I'm not a gloom and doomer. I'm not highly optimistic of a booming summer that's going to bring the buyers out of the woodwork. And somebody's probably going to hit me over the head over that comment, but that's how I feel. And that's where I think the market is. If you have any questions, shoot me an email at rick@rickhelps.com. Take care.